Good afternoon. This is Craig Modelmog of Cornerstone Wealth Management, and this is the week of April 20th. Today is Monday, and of 2020. And I would like to welcome everyone to today's show. I'm getting so cocky. Dang, you know what? I start out and this is just kind of stupid. I was going to do probably more mentally stimulating than anything. And then I called it a show, and my cousin Brian says, Craig, it's a show. And now I'm calling it episode. Ridiculous. I appreciate everybody's humor, and I appreciate everyone appreciating or at least bearing my humor. But I would also like to throw out this disclosure or disclaimer that the opinions on my show are strictly mine. They are not a recommendation to buy or sell anything, because it's not. Our goal is to really help people become better investors, and investments can, will, and do lose you money. That is a fact. That is on fiction, which we talked fact a lot on my show. So anyway, welcome everybody. It's been a little over a week. I see I dressed up for you today. I was feeling guilty sitting in my jeans and my KU t-shirts. Jim, no KU t-shirt. That one was for you, boy. Anyway, I dressed up for everybody this morning. I was kind of get up, iron a shirt, kind of getting back in it again. So it's kind of cool. But anyway, I'm going to kick the show off today. Remember how David Letterman, big David Letterman fan, he used to talk about his top 5. Maybe he did his top 10. I couldn't come up with 10, so I come up with 5 here. These are the top 5 things when you know something just isn't quite right and that there might be a COVID-19 problem that is making all of this happen. The first thing I call number 5, face mask reluctance. What this means is when you are sitting in your car and before you get out, you really don't want to put your face mask on. So you're watching all the people come in and out of the store, and you're counting how many have face masks versus how many that do not. My daughter, Lizanne, I love you, babes. She can vouch for this because I did this while I was talking with her. And she's like, Dad, you've literally lost your marbles. And I'm like, I know, but shut up. I'm counting. I have to get at least 3 out of 10 before I can go in without my mask. That is number 5. Number 4, I call it drippy grocery cart handle phobia. What this means is when you go in and you grab your cart and the nice lady or man that has a mask on and gloves and a big ass spray bottle and a rag are hosing down your cart, of which when you grab it, it is drippy. Okay, drippy grocery cart handle phobia. That's number 4. Number 3, no face mask shaming. This is when you're standing in line and you are experiencing or you're exercising social distancing and you do not have a mask on and everybody around you does, and you know they're looking at you just talking crap on you. Or flip that around, you have a mask on and all of a sudden you're looking at everyone that doesn't have a mask on, thinking in their head, what a dog. I've done both of those, okay? That's number 3. Number 2, when you know that you are in a COVID-19 pandemic, when the checkout line wraps around the back of the damn store down the frozen food aisle, you know something's wrong, okay? That's number 2. Number 1, this is called when you have your ears that stick out like this, and this is, no, I wasn't born this way. My damn mask straps are too tight, and now my ears are stuck. That didn't fly very good. So I need better cards. Anyway, you gotta love that. Hey, onward and upward here. I actually have a couple questions. For those of you that have questions, one client said, hey, are you taking questions? I said, yeah, fire away, shoot me some questions. So Dave, thank you, bud. He shot me a couple questions. The question is with the government, as the government continues to float the economy and print paper money, the chances for the value of the money to go down, inflation seems ominous to me. Dave, you're right. Here's the deal. We are printing lots of money. Our country is going into more and more debt. What are the safe havens? That was the back half of his question. Here are the safe havens. Number 1 would be U.S. government treasuries. Okay, government treasuries always have been, more than likely going forwards will continue to be safe havens, okay? Number 2 is actually the U.S. dollar. The US dollar, number one, it is the one world reserve currency. That is not going to change. While other countries are printing tons of money, just like the United States is, the US dollar is going to remain strong. So you can actually buy the US dollar, okay? And then lastly is gold. Excuse me. I've been doing this for 27 years. I swore I would never say this. Gold, okay? There is one time when gold makes sense owning. One time only. That is when you have growth in the economy is shrinking and inflation going down. That's what we have right now. Probably a decent chance in my core portfolios, we're going to see some gold ownership coming up here. Just throwing that out there, okay? Last question is there a chance that inflation-protected securities might backfire? Because TIPS, Treasury Inflation Protection Notes, are backed by the U.S. government, no, they are not going to be a bad piece of paper. Nothing's going to happen. What I will say, though, is with inflation going down, okay, they will not return well. How a Treasury Inflation Protection Note provides you a rate of return is when inflation is going up, because you get in a certain rate of return over what T-bills are paying. So right now inflation is going down. I would avoid tips like the plague just by straight up short-term U.S. T-bills, long-term U.S. government treasuries, okay? So anyway, throw your questions at me because I'm more than happy to answer them, and I will on the next show. You gotta love that. Anyway, let's get on my top 5 stats. Just to, again, focus on facts. We are in a economy where we have growth that is slowing and we also have inflation that is going down, okay? This is earnings season. This is stat number 2. So far, and this is as through last Friday, 47 of the companies in the S&P 500 have reported earnings, okay? Year over year, first quarter earnings, so this is Q1 in 2020 versus Q1 of 2019, they are down minus 30.8%. That's terrible. Retail sales printed the worst number since September of 2009, down 10.78%. Okay, so retail sales fell to a minus 6.1. That is the worst print since September of 2009, and it's the quickest drop ever. You don't like to hear ever. Industrial production fell 5.5%. So for the quarter, we were down 5.49. That's the worst print since November 2009. And again, it's the quickest reversal ever. Okay. If you look at of the 23 million jobs that were created the last 10 years, okay, 96% of them have been erased in the last 4 months. I'm adding context, okay? I talk facts a lot. We have to focus on the facts. It's during times like this when we get very emotional, we have to suppress emotions. We have to focus on facts, okay? Moving on here, let's focus on bear markets, of which we are in one. There are 3 stages of a bear market, okay? There's the first phase, which is phase 1, and it's termed, the market is temporary and this won't last. The market's already discounted the worst. We are in phase 1 right now, okay? We're in phase 1. Phase 2, the fundamentals are worse than anyone could have imagined. Oh my gosh, that's phase 2. We're not there yet. That's coming, okay? I think the markets have been focusing on one thing only, and that is the COVID virus pandemic. It's been ignoring the fundamentals of the economy. So that is coming. Phase 3, the bear market will never end. The economy will never recover. I'm jumping off a cliff. I added that myself. And the new normal is forming. That's phase 3. We're definitely not there, okay? What I find interesting is there are 4 different types of bear markets. You know, you got to love that everything comes in series, right? You have a U-shaped You like my hand? See, this is why, for those of you, if this is the first time tuning in, this is uncut and unedited. This is legit, okay? And I'm about ready to prove that, because I'm showing you, instead of with really cool, very fantastic digital images, I'm giving you hand signals. It's not sign language. This is not C, although I learned that at Beatty Elementary School. This is C if you're sign language. This is called a U-shaped bear market, where you get the sell-off, it kind of goes down nicely and ramps back up, okay? The second one is a W shape, okay? Where you kind of go down, you get the chop, you go down again, and you come back up, okay? That is a W shape. You then have a V-shaped, okay? Which is a very swift sell-off, only followed by a very swift incline. So decline quickly, incline. The last one is an L, okay? See, this is extremely high tech. I'm so fired up here. An L shape, where you get the sell-off and things kind of bounce around because the economy is terrible. Right now, you've got about 2/3 of the economic world that is what I would call overly optimistic, where they really feel like we're going to get some type of a U-shape or V-shape recovery. I don't see that happening, people. I really don't. I think the market right now is severely dislocated, okay? We're just starting to see economic numbers come in which what they are showing us is some of the worst numbers we have ever seen or have not seen since the midst of the financial crisis in 2009, okay? What do you do going forwards? That obviously is the million-dollar question. The kicker is this, okay? You have to choose. In my quarterly write-up that you all probably have received and looked at, I did a cool Yogi Berra. I love Yogi Berra. He's fantastic. Where he says, when you come to a fork in the road, pick one. What his infinite wisdom is saying, you have to make a choice, all right? When it comes to managing money, or when it comes to your portfolio, during the initial sell-off, number one, we had the most swift peak to trough 30% decline we've ever seen and witnessed in the modern day era. Okay, that's huge. You can't do anything. People say, well, what can you do to protect yourself? Well, first of all, having an appropriate asset allocation prior to that happening, focusing on risk, helps provide a buffer, okay? Meaning you don't get your face smacked as hard as you could have because you were allocated appropriate to your risk profile or the level of risk you are comfortable with. Actually, you're not comfortable with, but you don't want to shoot yourself in the head with, okay? Here was the challenge with this rapid sell-off. It didn't give you a chance to do anything. So as markets have rebounded, so we've seen this pretty rapid rebound here, which again, it's all been COVID virus related, meaning we get a positive number, flattening of the yield curve. You got all these cool new jargon terms we're going to read about in history books. Every time we saw that, or President Trump, I've actually been calling him President Pump. He is literally the most rah-rah president we have ever had, which for those of you that can't stand him, FYI, that's what a coach does. A coach is optimistic, and they're going to build you up even in the face of you're facing a team that's going to pound your tail. Okay, that's one. On the flip side, the over-optimism sometimes can come back to bite you. Double-edged sword, right? Double-edged sword. But anyway, I think the markets are not focusing on the economy, and I think that is where what it's done, it's allowed me to make some adjustments preparing for the future. Again, pick your path, right? My path is I think we're going to have a longer, more drawn out recovery, okay? As a business owner, if you've laid off all of your staff, which some of my friends have done, some of our clients have done, when the day comes and we get from Governor Paulus, head back to work, or we're going to start segmenting our economy back to work, you don't just go flip the lights on and hire everyone back. It does not work like that, okay? This is going to take time, okay? You have to rebuild pipelines. Restaurants, I don't know about you, I'm not excited to go out to eat right now. Okay? People are saying, hey, you can go in and buy takeout. When you walk in to buy takeout and they've got a stinking mask and gloves on, no offense, I'm not a buyer. I'm just not. So I'm not sure how quick this comes back. So with that said, also, this COVID virus is not going to go away. Until we come up with a vaccine or a way to treat it successfully, this is here to stay, which what that means is we're going to flatten the yield curve. We're going to see better numbers. But as we go back to work, and this is being proved in other economies around the world where they did a great job of locking down. We saw it in South Korea. We saw it in Indonesia. We've seen it in Singapore. We've seen it in other places. But as people have gone back to work, what have we seen? We've seen numbers rising again. I think we're going to have these flare-ups. It's kind of like putting out a forest fire where you squirt the tar out of it with water, you mix it up with your shovel, and you sit there and you look at it going, I think I put that out. But then what happens? You have flare-ups. I think that's going to continue, which means we're going to be battling that for a while, okay? That's why I'm saying the decision I have made was in the midst of this rebound, I've been repositioning more conservative with anticipation of more and continued volatile times in the marketplace. Okay? If I'm wrong, we're in a V recovery and I'm wrong. I don't think I am. When you look at the economic numbers that are coming out right now, they're terrible. They are not going to get better. That only factors in one bad month in Q1. What do you think Q2 is going to look like? Even if we start back to work, Q2 is going to be a train wreck, okay? So knowing that and knowing how the market is going to digest this, it's going to take time. We have to be patient, all right? There's one time, and you guys know me, I always talk about early bird catches in the worm. I get up and I get in here, and I've been doing it since I got in this business. My first branch manager, Bert McGovero, God bless Bert, he's not with us any longer. He said the market opens at 7:30. If you're not here by 6:30, you're late. He beat that in my head. I'm usually in here by 6:45, 7 o'clock at the latest, if my dogs don't cooperate with me in the morning. So anyway, I think this is going to take time, people. We have to be patient. This is not something you want to be early to. Studies show that it's better to be late to this party than early because we want to see the economic fundamentals. We want to see the numbers. We want to see the math confirm what we're doing. And that's what I'm going to be patient and wait for. There are periods of time like right now where you may feel like you're getting left behind. You may say, hey, Craig, we're down 10, 12, 14, 15%, and the S&P is only down 13 now. What the heck? You know? And I would say patience, okay? We are positioned for more challenging days ahead because now we have time to prepare. That's what we didn't have before. So anyway, I want everyone to hang in there. I'm going to shout out to the people that I know that are on the front lines. First responders, my cousin Jay, my cousin Molly's husband Danny, Gina Gonzalez. Love you guys. We appreciate what you and all your people do, more than you know. All of our doctors, our emergency room people who are on the front lines, I know lots of you people. God bless you guys, okay? We appreciate you showing up in the face of this thing every day and working hard in a really bad situation. So we appreciate all of you people that are doing that, all right? To everyone else, you know what? Having a good attitude is a choice. Every day you have a choice to get up and choose, like Yogi Berra said, pick one. I'm choosing to have a good attitude. I'm going to choose to be positive. I'm going to choose to make lemonade out of lemons. Everybody take care. You know I love you all. Thank you for your time. Again, this is Monday, April 20th, and this is Craig Modelmog with this week's episode of Wall Street X's and O's, and I am out.